Welcome to StockMarketPending.com. I've got a weekly chart. I'm going to point out a new case of why in 2011, because I don't want people to go back and look at our radio show today on the Dow. The S&P is the same setup. However, what I do want to point out to people is how can 600, why could it be avoided, 600 here? And why could it go to 1350 over here? I will simply tell you in a nutshell. If they take the tax cuts off and they start doing everything right, just like I said in the Dow Jones tape, well, then the S&P could go up here in 2011, because it could. But they would have to do that. And they would have to prompt, and they would have to do 100%, meaning there would be no tax hikes, capital gains aren't going to be a problem. The lending institutions in America are going to start lending to small businesses, and we start doing the right thing. If there is a tax increase in 2011 and the Bush tax cuts come off, you will have failure in 2011 based on that in itself, and that's your target of 600 in 2011, and your upside target is there. But it will take a major event during the election year. Now, let's take a look at the current ratio here on the S&P. So for the SMF traders, is what they want to know, market makers that they are, is that the percent DS is above there off of this bottom. This is that bottom at 21. This is the bottom here at 25. This is another bottom, and that high held half of that bar on the S&P during the light volume couple of weeks of up move. That's the support level on the S&P right now, is half of the SMF weekly bar at 1053. Now, in a shorter term, with the amount of shorts coming off the table, is how could that thing break higher again? Would be if they came out with an announcement for the bulls. This is the bullish for the bulls, for their case, is that they come out, they make that announcement, and then all of a sudden everyone feels good. They know there isn't going to be any taxation in 2011, and lots of things that could derail the market, but could actually have an invert effect to the upside. And it's very, very important that you know where the failure is, but you also got to know what would spark a rally, just in case it was to happen, is that you're prepared for either event. You're prepared for failure, and you're also prepared for the economic event of the taxes, lending in America, and all of that. So there's a lot of stuff there. One takes it this way. Another set of events by the Obama administration can also take it that way. And it's very important to know that the S&P reversal up here that we talked about is trying to put in a short-term bottom because of the 2010 earnings season, is giving this bottom support. And the contingencies in Europe and the banking thing, 10 weeks still failing. So, you know, that 10 week will have to flatten out. You'll have to have 4 weeks above the 10-week moving average to even say that we're back in a bull trend now. 4 weeks below the 10-week decline is trying to flatten out. It still has a 10-week moving average at 6.9. No, I'm sorry, at 1079. Now, if 1079 flattens out here and goes flat and maintains a closing price above 1080 on the S&P, well, then that's a bullish support level, irrespectively of any of those announcements. But just remember that there's going to continue to be a lot of volatility in these headlines as to what this administration may or may not do. All I care about is that you know how to manage your wealth. And I can tell you another thing. All the money on the sideline and taking money market funds to zero rate of return would make people want to get back in here to get a yield on return on dividend equities. So the bulls have got all kinds of gimmicks and cases that they want to work, but then the bears are saying, wait a minute, all this other stuff is in the market and that's not going to work either. I'm telling you what will work and what won't work. And so welcome to the S&P.